Okay, so let's look at the question there on the impairment. So question 1. On January 1, 2014, Juniper Limited purchased a building for $2 million. Its estimated useful life at the date was 20 years, and the company uses straight line depreciation method. On December 31st, 2009, the government embarked on a plan to construct a flyover adjacent the building, and this decreased the access to the building, thereby reducing the value of the building. The company estimated that it can sell the building for $1 million, paying $50,000 in cost to sell. Alternatively, if it continues to use it, the present value of the net cash flows of the building will help in generating $1.2 million. Required. A. Determine whether the asset has what? Suffered impairment. And then B. How will the company account for the impairment loss in the financial statements? Okay. So that's what is happening. Okay. What do? We said an asset is impaired when the carrying value is more than what? The recoverable amount. So the first thing we need to do is to determine the carrying value. When did the issue take place? 31st December, right? Yeah. That was when the government embarked on the journey. Hence, as of 31st December, we need to calculate the carrying value of the assets. Now, carrying value is cost minus accumulated depreciation. When was the asset bought? So if January 2014 and we are in December 2009, how many years we got? 6. 6 years. Okay. So our carrying value will become, we tell the examiner we're working in thousands, safer all the time. So we have 2,000 minus 2,000 divided by economic useful life 20 years times A by 6. 600. And that gives us carrying value of 1,400. So that is the first step. We determine the carrying value of the assets. Once we know the carrying value of the asset, the next thing is to ask ourselves, what is the recoverable amount? How do we determine recoverable amount? The value in use and what? Fair value less cost to sell. The higher, right? So what is the value in use? 1.2. So we have that there, 1.2 mil. Okay, we're working in thousands, so 1,200, thank you. Then the fair value less cost to sell.
1 million minus
1 million minus 50,000. So that would be 1,000 minus what? 50. Another what?
Yes.
9,000.
950.
It's TDA, we're simple. We say recoverable amount is the higher of the two. So which is higher? 1,002, the value in use. Hence, the recoverable amount of the asset will be the value in use, which is 1,200. Now, if you check, has the asset suffered impairment? Before you do the workings, you need to ask yourself that question. This is 1,004. This is 1,002. So we see that the carrying value is more than what? The recoverable amount. So there is impairment. So the impairment loss is going to be 1,004 minus 1,002, and that will give us 200. How do we say we treat this? How do we say we treat this? Come on now, don't lie to me. You debit income statement and credit what? The asset account. You debit income statement and credit the asset account. Now they said, determine whether the asset has suffered impairment. So has the asset suffered impairment?
Yes.
So you write English. Who will calculation and I want to draw English. the asset has suffered impairment of $200,000. Now, that's the A aspect of the question.
Even the B, without calculating, the B has answered it for you. So can you write it just straight? Yes, it has suffered a loss. Because the B says...
Okay, it says determine whether the asset has suffered a loss. Oh, yes, it has suffered a loss of how much? 200,000. Okay. So the figure is important.
Okay.
Alright, so let's get a B aspect. It says, how will the company account for the impairment loss in the financial statement? That was what I said, that it will be recognized in the income statement as expenses for the year. That's all. To be recognized as expenses in the income statement. So here it's just about writing English. Okay, it's just about writing English. But assuming we are really preparing a full financial statement, the income statement would have looked like this. For 31st D's 209. What do you think we bring? We'll bring the depreciation for that year. And what will be the depreciation for that year? 600. How can you bring total depreciation for 6 years in 1 year? Matching an accrual concept. Movable company, you know what? So we bring for what? That year, the 2009. 100. That's it. This thing you have to be careful about it because the examiner will put you in the spot. So you don't bring the accumulated depreciation. You bring only the depreciation for this year. This is the second time we are saying this today. Then what do we bring? Impairment. What was our figure? 200. That's it. I said something. I said, assuming you finished and the recoverable amount rather is more than the carrying value, then there will be no impairment, rather there will be what? Revaluation surplus or revaluation gain. In that case, the difference will go to OCI. Other comprehensive income will go to OCI. Okay, so statement of financial position. What do you think we have? Property, plant, and equipment will now be carried at what? The recoverable amount, which is what? 1,200. That's it. That's it. So this is the answer to the question. Any questions?
You said the B. What do you write?
How will you account for the impairment loss in the financial statement? And you account for the impairment loss as an expense in the income statement. Do you get the idea? So that one is English. But I'm saying that assuming we are presenting a whole financial statement, or this one is a footnote like note I for income statement or income statement and statement of financial position, this is how we would have accounted for it.